Whether it's a 401k or an IRA that you have for retirement, one thing is certain: you cannot treat your retirement account like an ATM. And we're going to unpack this here on Retire Colorado with Alicia and Josh Lewis. I'm Bruce Steinbrock. Reach out to the team today. By the way, go to their website, lehmanlewis.com. You can find so much about the team. There are some downloadable assets for you, some information there. You can, again, sign up for Peace Out, Retire into Your Go-Go Years, Alicia and Josh's book that they penned. You can listen to past episodes of this show. Also, remember, you can find us on Apple Podcast and Spotify, wherever you get podcasts, YouTube. We're opening up the channel and letting you see our bright, smiling faces while we do the show. We also stream the show live on Facebook when we are recording the show. So just check us out on all social platforms. And remember to like and subscribe on YouTube, and so that you know when we are doing Retire Colorado. All right, Alicia, I want to talk about an ATM, treating your IRA like an ATM. That's a really, really big mistake. But let's put some strategy behind it. Now you recommend to folks.
Okay, so we giggle about it, but we actually see people doing this, like people that aren't our clients that are coming in. And we ask a lot of questions. Obviously, we do portfolio analysis at no cost, by the way. So if this is something you want to take advantage of, let us know. But we really take a deep dive. And sometimes we come back and we say, okay, well, can you tell us your strategy about why you're taking income off of, whatever accounts that they're taking from? And they're like, this is just where I'm taking it. I just thought that's where I take it from. And there's a big miss there because when you're not intentional about where you're taking income from, it can really put you behind the eight ball. It can make it to where you're not getting the benefits that you should be receiving. And I'll just give you an example. And just because I love bragging on Josh too, because I think that what we do in here, it just makes me smile. It just gets me really excited. But also, so we were in this review last week, or a strategy session with one of our clients, and just really going through, here's what's been going on in the past year. Here's what we see moving forward. Here's some of the things. And he was asking some questions about some taxes and, I think you're taking, money from this account, but then from this account, and why, and da. And Josh is sitting there and he was like, well, and again, he's like the financial analyst kind of nerd in the office, but like brilliant and just knows what everything is going on with all of the families that we work with. It's awesome. And he was like, well, we're taking money from this because you're getting, taxed on these accounts. And so then we're not just letting it, reinvest, because that way it would be double taxed. And then we're taking money from this again. And he just like, boom, 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 boom. And this is why, and this is where, and all the different, balls that are in the air. And our client looked at Josh and was like, and this is why I work with Lehman Lewis.
It was really nice.
It was really, and it was just like this, because I think more than anything, having somebody and a team of somebodies, right, that are really being intentional about where money should come from, how that's all working. It's not wise a lot of times just to take from one account. It is wise to make sure that this is an ongoing thing that's looked at. Again, it's not a set it and forget it. It might be something where we're saying this year, this is the account that we're recommending the income coming from because XYZ, but the next year we're changing it up, or, if tax things change, it is a moving target all the time. And so it's so cool, that we get to work as a team in here. And it's so cool to see the light bulb for our clients go on and be like, yes, this is why I've got Lehman Lewis. Because it shouldn't be the ATM, like just go get money out. Because there's a lot of other things too. This client is also a really big giver. And before they had us, they were taking income and then taking that money and just writing a check to their church. And we were like, no, time out. Let's do some qualified charitable distributions. And then you don't pay taxes on that at all. And they were like, what? Like, we didn't know that. And so there's just a lot of things going on. And so I don't know. I'm so proud of what we do in here. It's not only super fun, and it's like, I don't know, putting together a puzzle, but also it's so rewarding watching our clients flourish because of the hard work that we put into retirement planning. It's awesome.
Josh, did you want to? Obviously, she was glowing on you, but and rightly so.
I'm gushing as well right now.
Yeah,
I do look close.
Form your face.
Yeah. No, it is really cool. I think, you know what, like, and it was kind of like what she said, it is like putting all the pieces of a puzzle together. And I love that. But at the end of the day, like, that legitimately makes a meaningful difference in their lives.
That's pretty much as excited as he'll get about it, right?
It's super cool. And I'm not like,
no, you know, I know you're not.
Wait, if you saw him right now, you guys, he's tearing up a little bit.
It's not
just a little bit, because it is that important to us. And while I am like a little bit more extroverted, I'm like, this is amazing. And he's just like, this is so amazing.
It is. It really is.
All right, Josh,
I'm not trying to downplay it.
I understand. We just like to give you a hard time.
Thank you.
Inform your face. It just makes me giggle. All right. So there are a lot of do-it-yourselfers listening to us right now, Josh. How do you, especially with those folks? I mean, again, my brother's an engineer, so I pick on engineers a lot. They come with spreadsheets and they're digging in. And
it's easy to do.
Yeah. All right. So how do you figure out the income with all the different accounts and what's generating and what's not, especially when you have someone who has been really dug in and doing it themselves and, trying, and it's not control. That's probably a bad word, but for lack of another term, wrestling control away, maybe not completely, but helping them understand why the partnership is so key.
Yeah, this is a great question. And I think some of it is control, right? Because I think a lot of people look at stuff and think, nobody's going to do this. Nobody's going to give this the time and attention that I give it. And I very much have that same thought process about a lot of things I do. And it drives Alicia crazy. But it's just how it is. But I think, like when you sit down and you ask people these questions and you say, hey, what are your goals? What are your objectives? Like, why do you get up in the morning? What's important to you, right? We want to kind of put some context around all of those things so then we can look at and sort of apply just our unique skill set. It really is a unique skill set, right? God gives everyone unique talents and abilities, and mine just happens to be finance, where we work with a lot of people who do amazing things that I could never even consider doing. So when we're able to sort of look at it through the lens of what you want to do, then we're able to sort of apply that and look at, hey, here's all your accounts. Here's how they're structured. We're going to look at this account as legacy because leaving, an inheritance to your kids is important. And you have this big IRA balance here, which is going to be a tax liability if we don't address some of that. And maybe you have all of these appreciated stock options from your employer. What do we want to do with those? And looking at things maybe with some charitable giving and some tax planning and some income planning and just sitting down and kind of putting together some different, what we would call a scenario, and look at, hey, here's what happens if we spin this down and we're giving X amount to your church and appreciated assets or whatever that might be. But then kind of walking through that step by step and saying, hey, did we sort of hit the nail on the head here? Because, you told us that this was a priority. So we're looking at it as a priority and we're making some of these adjustments maybe on the fly to sort of just fine tune some things. But again, I think more than anything, we want to set a precedent that we're looking at your goals and objectives, and that becomes our goals and objectives in your retirement plan, because we want to do it to the best of the ability, but we also want that plan to reflect who you are and what you want to do in your retirement.
Well, and I think
yeah, go ahead.
Oh, I was just going to tag on to, we live in a world of experts, right? And I think sometimes self-directors more and more recognize that. And they're like, yes, I feel like I am the expert because I know my situation. I know my finances. But every single time we sit down with a self-director, I mean, every single time they're like, huh, didn't think of that thing. And it's not always the same thing, right? But there's always something. And that's where we're like, guys, this is where you need us. We deal with this every single day. Let us help you through this. And, we have a lot of self-directing clients, and they usually come to us for one of two reasons. One, they're like, I don't want to do it anymore, because to do it and do it well and be successful at it, it is a full-time job. But then other times people are coming in that are self-directors that are like, I really love doing this. And it keeps my brain going. It's kind of like my, hobby job or whatever. But they recognize I am not a licensed professional or an expert, and I need you guys to help me put together the plan. And I still want to, self-direct this account over here, but I need a plan. I don't just need a bunch of investments. And so I don't know. I think, again, we live in a world of experts. You wouldn't want to go to your family physician if you were having heart problems, right? You would want to go see a specialist.
Cardiologist. Yeah.
Exactly. So again,
and I also want to point out, we don't live in a linear world. I saw this YouTube video, and this guy was describing, Roth and Roth 401k. And so he was like, okay, there's $10,000 and you put it in. And if you do it in a Roth 401k, let's say it's 25% tax, and so you have $7,500. But the traditional, you put it in and it doubles over time, and they're both going to double, right? So $10,000 becomes $20,000, but then you have to pay the 25% tax, and it's $15,000, and you pay the upfront in the Roth 401k, so it's $7,500, and you double it, it's $15,000. Everything works out perfect, but taxes don't work out like that,
right?
And so in this last minute of this, just, again, help people understand why we don't live in a linear world and why getting help is key.
Well, I think more than anything, right, is the one constant in life is change. And, you look at all these tax code changes and things that have happened, and they're really favorable right now. But kind of like what you alluded to, our debt is growing at just an unsustainable rate, and taxes are the primary source of revenue for the government. So if you're sort of sitting on your hands thinking, oh, this tax rate environment's going to persist, for a prolonged period of time, I think you're likely mistaken, simply because it's not sustainable at the rate we're spending. So you've got to sort of look at it as, I want to plan based on today, but I want to look at this, 10, 15, 20 years down the road and make sure what I'm doing now is putting me in the best position for the future. And I think some of that is going to take a little bit of forward thinking there.
Reach out to Alicia, Josh, and the team, 970-446-1234. And we have more Retire Colorado right after this.